Stop staring at the red candles on the chart. Stop listening to analysts telling you the dollar has been saved. And stop panicking because silver dipped to the low 80s. Because while you were distracted by a paper smash in New York, the real move, the checkmate move, was already unfolding in Beijing. The United States thinks it won a battle by smashing the price yesterday. But China is preparing to win the war by flipping the entire board over. It is Tuesday, February 3rd, 2026, and the most important story today is not the price of gold or silver. It is an article quietly published in Chuxi, the flagship theory journal of the Chinese Communist Party. This is not a blog post. This is not an opinion piece. This is the direct voice of President Xi Jinping, and he didn't write it to discuss philosophy. He wrote it to issue marching orders. In this article, Xi states clearly that China must build a powerful currency capable of challenging the dominance of the US dollar. He calls for the acceleration of the yuan's internationalization and links currency strength directly to national financial security. This is not subtle. This is a declaration. He is telling the world that dollar hegemony is ending and that a hard asset-anchored monetary system is coming next. The timing is everything. Why publish this less than 24 hours after US banks smashed gold and silver? Because Beijing knows the smash was desperation. They know the paper attack was an attempt to defend a weakening dollar. And they are countering it with the one weapon the US cannot fight: physical truth. The United States defends its currency with debt, derivatives, and military projection. China is preparing to defend its currency with hard assets. Reports are now flooding out of Shanghai that this article is the precursor to a major announcement. For years, China's official gold reserves have been laughably understated. They report minor monthly additions, but the physical flows tell a completely different story. Imports through Hong Kong, domestic mine output, and off-balance sheet accumulation through safe and military channels suggest the real number could be 10 times higher. Thousands of tons hidden, waiting for the right moment. And that moment is now? Imagine the impact. U.S. markets unstable. Debt north of 38 trillion, confidence cracking. Then China steps to the podium and updates a spreadsheet. Not tanks, not missiles, just numbers. They announce not 2,000 tons of gold, but 30,000. More physical backing than any currency in history. In that moment, the dollar doesn't weaken. It collapses. Gold doesn't rise gradually. It teleports. The market realizes suppression was never about price. It was about time. Time for the solvent nation to accumulate while the bankrupt one printed. This is China's financial military parade, their equivalent of rolling hypersonic missiles through Tiananmen Square. A warning shot made of metal. And here's the irony. By smashing prices yesterday, the U.S. accidentally helped China. They put silver and gold on clearance sale. They widened the arbitrage. They made it cheaper for China to buy everything. That brings us to the mechanism draining the West dry. The Shanghai arbitrage vacuum. Right now, silver in Shanghai trades at a massive premium to London and New York. After VAT, the replacement cost inside China is over $36 per ounce higher than the Western price. Shipping costs are roughly $2. That leaves a $34 risk-free profit per ounce. That is not a trade. That is an extraction system. Why would anyone sell silver in New York at $80 when they can fly it to Shanghai and sell it for $120? They wouldn't. And they aren't. Bullion banks are loading planes. Vaults in London and New York are bleeding inventory. Every day this spread exists, thousands of bars leave the dollar system and enter the yuan system. And once silver enters China, it never comes back. It is melted, restamped, and absorbed into industry, infrastructure, and monetary reserves. The West is liquidating its strategic stockpile for short-term profit. Washington sees it now. That's why panic is setting in. That's why the State Department has scheduled an emergency critical minerals summit. That's why Marco Rubio is calling allies together. This isn't diplomacy, it's a war council. They are trying to build a NATO for metals, to stop the drain, to ban exports, to control arbitrage. But you cannot legislate physics. Capital flows to the highest return. Commodities flow to the highest bidder. And right now, China is paying a bounty for every ounce of silver on Earth. Silver is no longer just a monetary metal. It is the new oil. Solar panels, AI chips, missiles, satellites, none exist without it. The U.S. consumes 5 times more silver than it produces. If COMEX runs dry, the military-industrial complex stalls. And the market knows this. That's why yesterday's smash failed. That's why silver is already back above $86. That's why gold reclaimed $4,900 in less than 24 hours. A crash that fails is a signal. It tells you the sellers are exhausted and the buyers are in control. They threw everything at the market. Paper shorts, narratives, fear. And the market shrugged. That means the floor is real, and if the floor is $85, the ceiling is undefined. Shorts are trapped. Physical demand is relentless. The arbitrage guarantees higher prices because the only way to stop the drain is for Western prices to rise to match Shanghai. The US tried to hold the beach ball underwater. They lost their grip, and now it's launching upward. This is the final setup, the signal from Xi, the vacuum draining silver east, the panic in Washington, and the failed suppression confirming the bull market. The United States played its final card yesterday. It didn't save the dollar, it subsidized its replacement. China said thank you and bought the dip. The vaults are emptying. The river of metal is flowing east, and it is not coming back. This is your second chance. The smash was the gift. The squeeze is alive. The financial military parade hasn't even begun yet. Ignore the paper noise. Trust the flow. The East is buying. The West is panicking. The price is rising. Game over. Buy the dip.